Can't see the screen.
Yes,
How about now?
yeah, I can see it now.
So where did we stop in the last class?
We talked about type of chart and
Okay,
how the candle
okay.
and we also talk about some of the body and how the candlestick are being used.
All right. So let's let's go on. So we talked about types of charts. With types of charts, can you see? Can you hear me? Can you see my screen?
Yes, I can see you.
Okay. So we talked about types of charts. So we gave us an example that we have three different types of charts. The first one being the line chart, which is this. This was how people normally use charts back then, right? So this is an example of a chart. And another option we have here is the bars. The bars. This one too, it was also a type of chart to use to analyze the market back then. But if you look at it closely, you can see it's not looking pleasing to the eyes. It's looking hard to understand the movement, right? So this is also another type. So the current one where we make use of is the candlestick pattern, is the candlestick chart. So this chart was originated from Japan. It was started by a man in Japan. So when this man has used this candlestick chart to make a lot of money until it was introduced to the West. You understand? So today this becomes the new adoption of charts we make use of to today because there are a lot of reasons whereby we adopt it. There is a lot there is a lot of components that makes up a candlestick pattern, and it is also easy to understand once you know the formation to it, to how it forms. Now, we told us in the last class that for a bullish candle and a bearish candle, a bullish candle has to be which color?
A bullish candle should be blue.
Eh?
Blue color.
Blue
A bullish candle.
or green. We are currently on green and red charts now. So obviously, a bullish candle can be green here. Will be green here because if you look at our chart here, we are having a green and what red. So on another example I gave you, I said there is no rules that says the bullish candle has to be green. It depends on your preference. You can decide to change your preference here. You can decide to use blue as your bullish candle, and you can decide to use black as your red candle. So it depends on the color you choose. So here we are making use of an example of letting us know the bullish candle here means is green. Yeah. So now, the bullish candle is green. And when does a bullish candle opens and when does it close?
A bullish candle open from the down
Eh,
and close at the top.
exactly. The bullish candle opens at the downward. The bullish candle open the bullish candle open at the sorry. So the bullish candle open here and it closes at the top. You can see. So it closes here and it opens at the bottom. You can see opens here and it closes here. Now the bearish candle, which is the opposite of the bullish candle, for us to see a bullish candle we also want to see a bearish candle. So with a bearish candle, what do we want to see? A red candle. So it's a red candle we are seeing. And with a bearish candle, where does it open? Where does it close? Where does it open? Where does it close?
The bearish candle opens from the top and closes from the bottom.
Exactly. So it's opposite of what?
Up.
Yeah, and closes down. So it is opposite of what the bullish candle does. The bullish candle opens from the bottom and closes at the top, while the bearish candle opens at the top and closes at the bottom. Four. So the bearish candle obviously open here and closes here. So this is it. Opens here and it closes here. And here I tell us for us to complete the components of a candlestick, it must give us it sometimes if it has a wick, the wick signifies that that is the lowest it has reached and the highest it has reached. Now with these wicks we are putting there, during the formation of this candle, this was the highest point the buyers tried to push the price up to, and this now becomes our high. So that will be our high, and here will be our low. Our low that signifies during the formation of this candlestick, we notice we during the formation of the candle, we push the candle. Yes, ma. So now, can you hear me? Now, with the bullish candle, this is the high, the low, the open, the close. So this tells us that for a candle to form, it must have what we call OHLC. OHLC. The O is the open. Yeah? I can hear you. Yes, OHLC. OHLC is the O here is the open. The H here is the high. The L here is the low. While the C here is the close. And if you look at the current market, if you look at the top of this chart, you can see here too. We have same thing. O H L C.
Okay, English class, right?
Mm.
How many of them are in the class?
Just I think one.
One? Who is that? Maybe they want to rewatch. Okay.
Most of them normally we watch. So OHLC. This is the component of how a candle must form. this tells us that for a candle to form like this, it must have this OHLC. Now, if we go on the current chart, this is the current chart we are on. This is the 4-hour chart. Look at the last 4-hour candle. If we put our icon on it, we can see here that the candle has a high. We can see the candle has a high here. This is the highest point. We can see it also has a low. It also has a low. This is the lowest point. You can see the open. Obviously, it's opened down. See, it opens at the down, right? And it closes where? At the up. And this tells us that the open and close has to do with the body of the candle. You can see where our close is not at the wick, is at the body. So the body is what we use to make decision of an open candle and a closed candle. You can see it will be obvious when you see an open. You can see when that open forms. You can see with this bearish candle that close. It closes, it open here, right? At the top, right? And it closes down. You can see when this bullish candle forms, it also opened down. And when it close, it closes up. And when it's opened here, when the candle opened here, during the formation of this candle, we were seeing a bearish candle. Sellers were pushing the price down here. So suddenly the buyers came in. So the wicks is a representation of where the buyers or sellers, where they push the price, their participation during the formation of this candle. So the thing we are able to derive from here, during this candle, this was the lowest point the market reached. During this candle, this is the highest point the market reached. So if we click on this, if we put an icon here, see the icon I'm on here now, on this candle. If you check the up here, the OHLC, you will see the information you need on this candle. The open, the O is at 1.16147, and if you look at the open, where it's open, 1.16147. The next one, the I, if you look at the highest point, we closed at 1. Okay, what's the I? The I is 16565. Here too, it's saying the same thing, 16565. Are you getting it? Are you getting me? Or do you have a question?
No, I'm listening, sir.
You can see the highest point, 1.16565. You can see. If you check that candle, that information again, the low. If we go to the lowest point of this candle, we can see the lowest number the market reached. Let's check. The lowest point is 1.15985. You can see 1.15985. You can see. Are you seeing where I'm seeing my figure? Like the right hand side. You can see it is there. 1.15955. So this tells us that without the OHLC, there's no how we will be able to understand whether a candle closes bullish, bearish, the lowest point and the highest point. So it is important to have this OHLC, because with that we'll be able to know the components of how a candle forms. With a bullish candle closing greenish, we know that the market obviously closed bullish, but we need that information. That information we needed is the OHLC, the open, the close, the high and the low, and we can see that here. Is that clear? So we understand how candlestick opens and closes now. Huh?
Yes, sir.
Okay. Now let's move. So here now, this is the, I told us in the last class that every time frame represents, every candlestick pattern here represents the time frame you are on, right?
Yes, sir.
So the current chart we are on is 4-hour chart. So this 4-hour chart simply means every candlestick we are seeing here is a representation of 4 hours. 4 hours. When 4 hour elapses, another candle will form. If we go on daily, same thing. This is today's candle. This is today's bearish candle. This is today's bearish candle. You can see the today's candle is looking bullish, and before the close of today we might still be seeing the market pushing down, and if it pushes down we might still be seeing a bearish candle. We might still be seeing a bearish candle. So for this, for the total, for us to actually see the OHLC of this daily candle, today's candle needs to close. And here you can see the candle is still forming its thing. This is the current price of where the market reach. If the market closes here, it means the market open here, the lowest points here, the highest points here, and it eventually closes here. But the candle is still forming, so it might decide to still push up more. And if you look at the wicks at the opposite, what is the wick? The wicks are the shadows. The below wicks is the lowest point the market has reached for today. The highest point is the highest point here the market has reached for today. And the open, this is the open, and the current place where the market is at is here. If the market closes here, that means that will be the close of this daily candle. Is it clear? Okay. So now, having known how a candle open and close, there are some candlestick patterns. We call them candlestick patterns. Candlestick patterns. You see, these candlestick patterns we want to enter is for us to see a bearish candle. The thing we can derive from it is that the sellers are selling the market. If we see a bullish candle, it simply means the buyers, people are buying that particular market. People are buying that particular market. Now, for us to be seeing series of bullish candle moving up, it shows that a lot of people are buying this asset. That's why it is going up. If it reaches a point whereby we are seeing bearish candle, it simply means that people that have been buying, probably a lot of people are now selling. That's where we are seeing a bearish candles forming. You understand? So what makes up a bearish candle is because sellers are selling. Traders who are trading that market, they are selling. And a candlestick and a bullish candle simply means traders who are trading that market are what? They are buying. Do you understand? So now, how do we make decision as a trader if we want to buy or we want to sell? What are the things we need to see? What are the candlestick we need to see? This is where candlestick patterns come in. Now, this candlestick pattern will make it easy for us to see and understand when to buy and when not to buy and what to avoid. Now, this candlestick pattern, we have different ones. We have single candlestick pattern, which is what we'll be starting with today. The single candlestick pattern simply means the single candlestick pattern simply means that we need just a single candle, a one candle, to make decision to either buy or sell. You understand?
Yes, sir.
Now, with a single candlestick pattern, we only need to see just one candle to either buy or sell. Now, one example of the candle we normally look out for is what we call it pin bar. We call it pin bar. And the opposite is a shooting star. You can see this pin bar is representing for buys, while the shooting star is representing for sell. So how does it form? So the pin bar forms in a you can see. What do you notice about this pin bar? Where did it open? It opened here. It opened here and it also closes here. But what are we able to derive from how this candle closes? You can see when this candle opened here, it sold all the way down. The sellers were selling this market, but suddenly the buyers came in, they bought the market and pushed it all the way to this point. And when they eventually closes this market, they closes it at the top. They closes it above the open. This is a strong indication, if we come across it, that the buyers are ready to buy that particular market. Do you understand? Or I should repeat. Do you get it?
Yes, sir.
Okay. Now, we want to make use of it as a candlestick confirmation for buy. When we are saying it, we are understanding that what happened with this candlestick is that when it forms like this, when this candlestick open here, we were seeing bearish candle like this, looking bearish, but suddenly buyers stepped in. They were buying that asset, so they were more than the sellers who are selling. So suddenly they came in, they pushed the market all the way up and eventually closes it here. Do you have a question?
No, sir. I'm okay, sir.
Okay. Now let's look at example of a pin bar on our chart and see how it forms. You can see this is an example. You can see this is an example. Can you see it?
Yes, sir.
You can see it's just like the exact thing I said. What happened here? This candle opened here. During the formation of this candle, the sellers push the price all the way down. When they push the price all the way down, they push it back up and they eventually close above the open price. You can see it. When it forms, you can see what happened. What happened afterwards? Market what? Market started buying. Are you with me?
Yes, sir.
And mind you, sometimes this bullish candle might be the bullish candle might be red. In this case, it doesn't matter, the color doesn't matter. But what matters is that we were able to derive something, that the buyers are giving us rejection. They are letting us know that they want to buy this market. That's why we are seeing rejections. These weeks will serve as rejections. They were rejecting the sellers to push the price downward, but instead the buyers are in. So sometimes it might also closes bearish, but what we are able to derive from is that it's giving us an indication that buyers want to buy because of this week's rejection. Do you understand? Or I should explain it?
I'm okay, sir.
Okay, you are getting it.
Yes, sir.
Okay, nice. Do you have any questions so far?
No, sir.
Okay, now let's look at. Now we know the pin bar color does not matter, but when we see it, we want to see it as a candle that wants to push price up. Please, again, is slow. Okay, let's look at another example. Okay, we've seen another one here. You see this one too. You see it? Can you see it?
Yes, sir.
Can you see it? You can see we said the color doesn't matter. This is exactly what we mean. You can see when it forms here. You can see it did not close this bullish, but what we are able to derive is that when it forms, it gives us rejection from the bottom. Sellers were pushing the price all the way down, but sellers stepped in, and when it forms, what did market do? Market started what? Buying. Let's look at another example. Now look at another one again. You see another one here. Can you see it? Look at the weak rejection. This candle obviously opened here. Sellers push the price down during the formation of this candle, but suddenly buyers stepped in. So in this case, it is the weak rejection that we are considering as priority, as something special. It is what we want to derive that the buyers they want to push price up, and you notice that once it forms, what will happen? Market will start what? Going up. So in this case, if we are making use of this trade to buy, we are buying at the close of this candle after it forms bullish, and our stop loss will be below the candle. And mind you, we don't just trade when we start understanding candlestick pattern. We don't just trade candlestick everywhere we see it on chart. There are some places whereby we make use of them, but as time goes on, we'll be showing us all those ones. You understand? So the most important thing now is for us to understand how this candlestick works, which is the most important thing. Now, so are you getting it?
Yes, sir.
Okay, let's look at another. Okay, see another one here. Look at another one here. Can you see it?
Yes, sir.
That is an example of a pin bar. Now we can see the color doesn't matter. We've highlighted two. Laptop yìí kàn hang ni. Jay, laptop yìí kàn hang ni. Yeah. Tí ẹ̀ mú ìwà. Tí ẹ̀ wọ́n dàgbé trading view àní àní. Network lóòótọ́. So let's check. Now we've seen different examples of a pin bar, right? Now let's check for shooting star. So with the pin bar, the color does not matter, but what we are able to derive from is the rejections we are having below. Now let's change it back to green. So now the shooting star, let's look at how does a shooting star forms. Obviously the shooting star is the opposite of the pin bar. So if we are using the pin bar to make a buy decision, we also want to make use of the shooting star for what? For sell decision. And also, yes, obviously the color, the color doesn't matter on this one again. But let's look at what happened here. The market opened here. The market opens here and it closes below the open price. Right? Market opened at the top and it closes down. During this candle, buyers pushed the price all the way up, but sellers came in. They were selling the market and they pushed the market all the way down. It opened here and it closes here. This was the lowest point of this market. This is the highest point. So that's why it is classified as a shooting star. Once it happens at a place whereby we want to sell an asset, we are making a sell decision. So where will our stop loss be? Our stop loss will be above this week, because that is the place we expect buyers to not go past. Sellers are in, buyers are weak. Here, sellers are weak, buyers are strong. Do you understand? So now let's look at an example of and also for us to consider any candlestick pattern, it must form, it must close. You can see this one now, this current candle on daily, you can see it's giving us like, this current candle is giving us like what candle is it, what pattern is it giving us? This current candle that is forming, this current one. No, it's giving us the formation of shooting star. It's giving us rejection from the top with how the market, how the candle looks. If it closes like this, that means it's a shooting star. But don't let us get confused. Let's still go and look for example of how a shooting star looks like. You can see now this one too. Omo. Okay, you can see here, you can see the shooting star example here. Can you see it before I label it? Which one are you seeing? Green or red? You can see both are there. The first one is here. The first one here, you can see shooting star, it forms. The second one too, here, shooting star, it forms. You can see. This is why we say the color doesn't matter. But what we are able to understand is the rejection is at the top. It's the rejection that matters to us. The rejection doesn't matter. The rejection, the color doesn't matter. It's the rejection that matters to us. You can see the first one forms here. When it closes, market sold for a while. This one came all the way up again. We saw another one again. Market sold for a while. So that's why I said there are some places whereby we expect to use this. We don't just want to use it anywhere on the chart. What we are seeing here is buyers and sellers fighting each other, looking for who will take over control. So there are places whereby we make use of all these candlestick patterns. So as time goes on, we will understand them. You have a question?
Yes, sir.
Okay. So for us to also consider a shooting star, we need to look at the length of the wicks and the body. In a situation whereby we can remove the body at least 3 times in the wicks, we should be considering it as a false shooting star. Look at this one now. Look at the body. Can we at least remove two of these from this week? Can we remove the body? Can we see times two of this body at this weeks?
Hello, sir.
Yeah, can you hear me?
I can hear you, sir. The network is good.
Okay, the network, yes, the network is really giving us issues. See network, you know, ṣe no. Ah, network yẹn worse too. So, what I'm trying to say, can you hear me?
Yes, sir.
You can see the body of this candle now. We can't really classify it as a shooting star. Why? Because the at least we can't remove times two of this body from this week. You can see the rejections is not much. It's very low. Do you understand what I mean?
Okay.
For us to actually see a strong shooting star, the rejections has to be at least huge, long. Now let's look at one example here. Let's go on the 4 hour chart. Let me refresh. The network is shitty. Okay. Sorry, the network is just being shitty. It's the network that is slowing this. So now look at this rejection. Although we are not using it at where we want to sell, but we just want to look at an example of it. Can you see this? See this one? Can you see this one? Omo. Hello? Hello, can you hear me? Hello? The screen is not showing. It's showing now. And it's network. It has been showing. So can you see this current one I'm trying to let you see?
Yes, sir.
You can see the body. You can see the wicks is long. Although it is not where we want to make use of it, but we just want to use it as an example. You can see the wicks is long, and that body, at least we can remove times three of it from here, right? Yes, that's exactly how we want to see how shooting star will be. Now imagine one. If we are looking at one that doesn't have that long wick rejection, it is not enough for us to use to consider a shooting star. Look at this one now. Look at this one. This one, the wicks is, although we can still call it a shooting star, but we shouldn't expect it to be as strong as one that has a long wicks, because that long wicks is an indication that the sellers are pushing price down. Do you understand?
Yes, sir.
So Now let's look at here. Look at this one now. This is a perfect example. You can see how long this one is. Look at how long it is. At least this body we can remove like times 2 or times 3 from this body, from the wicks. So this one is a strong indication. Once we see, you see this one is a pin bar. This one is a strong indication that buyers are rejecting. They want to push price up, and once it forms, we've made our entry. You can see what happens. Markets bought all the way up. Can you see it now?
Yes.
So do you understand the concept I'm trying to let you
Yes.
know? You have any questions so far? You understand?
Yes. Yes.
Okay.
Yes, I'm understanding that.
All right. So let's keep checking. So far you will be seeing that all these candlesticks, they are like interpretation of what the market is saying. We are with this candlestick pattern introduced by the Japanese. It let us understand how to read the market, how to know who is in control between the buyers and sellers. And this is just the first of many candlestick patterns we will know. There are still a lot of candlestick patterns to know. Once we understand all those candlestick patterns, we will be able to read the language of the market. You know, if you are in Nigeria here, if you decide to travel to China, are you not going to be looking to learn Chinese?
Yes.
Exactly. So that's how trading is here. For you to go into trading, you need to understand the candlestick pattern. You need to understand the meaning to the formation of every candlestick pattern you see on your chart. So to make it easier, that's why we have the most commonly used ones. Now, for the single candlestick patterns, the pin bar and the shooting star are the most commonly used one to either buy or sell. So we need to make sure we understand that before we move on to another one. We have a single candlestick pattern. We have two candlestick pattern. Two candlestick pattern means that you need two candles to form to make decision. Three candlestick pattern means you need three candles to form to make a buy decision or a sell decision. Single candlestick pattern means we are only looking at just one candle to make decision. You can see now. See? So let's keep checking. Okay, see another one here. You can see why we say the color doesn't matter. You can see why we say the color doesn't matter. You can see this one forms with a long, in fact, this body, we can remove like up to 5 from the wicks. Is that not it? Hello?
Yes, I'm with you.
We can remove the body of this one here, at least 5 of the body of this one from the wicks, right? This is exactly how we want our pin bar or shooting star to look like. So we know with this one is a strong indication that the buyers want to buy the asset. And what happened after it forms? See how the market started buying. So is it clear?
Yes.
So any question? You can see this one. Okay, I think there I saw another one here. You can see now. Okay, this is another topic. Okay, this is another one we highlighted. Look at this. We see two. This is a pin bar. You can see we can at least remove 3 times of the body from the wicks, and it does its job. You can see. So that's it. So that's where we'll be stopping for today. You can see this is another one again. This one too, the color doesn't matter, just like we said. Can you see it?
Yes, sir.
You can see it. You can see how huge the wicks is, and it closes bullish. It closes a bullish candle. But the thing we are able to see here is a shooting star. We see the rejections from the top. Sellers are selling off this market, and when it happens, you can see how the market sold. So this is how the pin bar and the shooting star can help us in making decision to either buy or sell. in the market. Is it clear?
Yes, sir.
So, do you have any question? That will be where we'll be stopping for today.
All right, sir.
No question. So have you logged in your trading view on your laptop?
Yes, sir.
Okay, I will give you an assignment.
Okay, sir.
So the assignment I will give you is the candlestick pattern we talked about today, the pin bar and the shooting star. So you go on your chart, you come to text here. Once you click text, you can even favorite it like I have favorited my own and it is down here. You can see all the tools I favorite is down here. So you also come to this trend line. You favorite this trend line, and you can also come to this arrow. You favorite this arrow. Now what I want you to do is when you see and you also favorite this brush too. This one I'm using is brush, and this brush it will make me cover highlights, cover something like this so that I can round it what I saw. So
Which one is brush?
this one here,
Okay.
see it here, you can favorite it brush. Everything you favorite, you'll be seeing it here. You'll be seeing it. You can put it at anywhere on your screen, but make sure you put it either up or down
Okay.
so that it will be easier for you to tick. Now, if I want to identify that what I saw here is a shooting star. What do I need to do? I need to click my arrow. You can see that arrow lets me know that the box I highlighted through my brush, what I'm seeing here is a shooting star. You can see.
Okay.
I'll just click test. The T here, I'll click test. I'll now say shooting star.
Okay.
Shooting star. You can see that's a shooting star. Now, if I see another one, okay, this one I saw here, I can see pin bar there. I'll just click my brush and I'll highlight it that I saw. This is the pin bar I saw. Now, I will still click my arrow, letting me know that okay, this is what? This is a pin bar. You can see. So this is how I want you to also do it on your chart. So next class you send it as an assignment. You send your chart to us. We'll forward it.
Okay.
So we'll check it. So you go on any pair. It could be crypto. It could be BTC. It could be any pair. So just go on it. Make sure you highlight at least four for pin bars and four for shooting stars. It can be on the same chart. It can be on the 4 hour daily, or just make sure if you highlighted it on 4 hour, make sure everything you highlighted will be on 4 hour. All right. So that will be where we'll stop for today. So in next class, make sure you do the assignments, forward it to us before the class starts so that we can check it.
All right.
All right. So,
Thank you, sir.
all right.
Thank you, sir.
All right. Welcome.